Welcome to another lecture in personal finance. I'm Jim Munchback, and today we're going to talk about insurance. So, insurance is one of those things that you spend a lot of money on, and that is the reason that insurance is part of our personal finance course at the University of Houston. So, welcome again. It is for February, year of our Lord March 4 of March 2025. So again, welcome. We're going to talk about insurance. We have a lot to cover today. I want to spend a few minutes just highlighting some of the things that we're going to try to talk about today. The truth is, insurance is a very vast topic. It is a topic that we could spend more than one semester just on personal insurance. So think about insurance as risk management. Insurance is a way to transfer risk to the insurance company in exchange for a premium. So if you're a business owner, you would have insurance for your business, for the building, for the computers, for the cars that you drive in your business. Business insurance can go on, and then there's liability, products liability. There are so many topics in commercial insurance, business insurance, and that doesn't even touch personal insurance. So we're going to talk about personal insurance mostly today. And again, this video is in the playlist for this semester's cohort for the folks who are in our course of personal finance at the University of Houston at the Bauer College of Business. So I want to cover as much as I can some areas of personal insurance. And again, you're not going to be an expert on insurance because of this week's lesson. You're going to read a lot this week about insurance. You're also going to do your homework assignment. Your primary homework assignment this week is going to be getting an insurance quote. So I'll talk about that a little bit as we go through today's lesson. But that is the main assignment for this week, is for you to get an insurance quote. So we'll go over some of the coverages in the auto insurance, because car insurance is probably like the most relevant type of personal lines insurance that you could need, you will use. You will spend a lot of money on insurance in your lifetime. And since it is a large part of your budget, a big category in your expense side of your budget, expenses, insurance is a big expense. And so I want you, my goal, my hope is that this lesson, this lecture, this week's study will prepare you to become a better consumer of insurance, because you're going to spend a lot of money on insurance. So we'll do a little bit, I'll cover the auto insurance quote. I'll talk a little bit about collision coverage so that you know the difference between collision and comprehensive. We'll talk a little bit about deductibles. If you don't know what a deductible is, you need to learn what a deductible is and how it works. Basically, a deductible is what you select on your policy, and any property insurance includes a deductible. And so you select the amount of the deductible, and that is the amount of risk that you retain. So if you just use good logic, you will realize pretty quickly that if you retain more insurance, more risk rather, if you retain more risk by having a higher deductible, you're going to pay a lower premium. So that's why you want to have as high of a deductible as you can afford. So you don't want your deductible to be so big that if you get in a car crash and you total your car, you can't afford to pay the deductible. So you have to pay the deductible. That's how much you reach into your pocket for, and you contribute that to the repairs, whether it's your home damaged in a hurricane, or your car damaged in a hurricane, or in a collision. So we're going to talk about mostly car insurance, difference between a collision and comprehensive, but the deductible it applies to both coverages in auto, collision and comprehensive, and it applies really to any property coverage that you have, like your home. So think about a deductible as your part, your choice for how much risk you retain. So we'll talk a little bit about that. I'll go over the liability limits in a car insurance policy. Hopefully you see on the screen 100, 500, 100. Those are decent coverages, but they're more than the minimum. So you could just carry the minimum liability, and we'll talk about what that means. And then we'll try to dive into a homeowner's policy and just look at the different coverages in a homeowner's policy. So you've got the coverage for the house, which is coverage A, the dwelling, that's what covers the building if you own your home. And you have to have these insurance coverages, by the way, if you have a loan. And since in our course you have decided to own a car and you have decided to buy a home, you are required, in our imaginary plan, you are required to have these insurance coverages. So you're going to have to do a little research, starting with getting a car insurance quote for that dream car that you bought a couple weeks ago. That's part of this week's assignment, is for you to go out and get a quote for that particular car. So I'll tell you about how to do that in a minute, so pay attention. You're going to want to pay attention to the specific instructions for how to go about getting a car insurance quote. So if you haven't started that, please don't start it until you listen to what I share about how to do that. I'll save you some headaches. So anyway, the homeowner's insurance includes, and all insurance policies include different coverages. And that's what I want you to just begin to become aware of, is that just because you have a car insurance policy, that policy has several different coverages. In fact, I'll tell you right now, in a car insurance policy or a home insurance policy or a business policy, any property or casualty, that's what it's called, property and casualty. That's property coverage, is first party coverage. That's what pays to protect you. You pay a premium so that if your property gets damaged, your property coverage reimburses you for the covered loss. So your home, your car, your business, if the building gets destroyed or your property gets destroyed, the property coverage, that's section 1 of those property and casualty policies. Section 1 is the property section, and it has several coverages inside of section 1. But there's also section 2, which is the liability side. So whether we're talking about car insurance, home insurance, or business insurance, all of those property and casualty policies have 2 sections. One is the property coverage. That's the first party. That means it pays you for your damage. And section 2 is the liability section of the policy. That's what protects you against liability, against getting sued for some damages that you cause or that are your responsibility. And that could be bodily injury or property damage. So just keep that in mind, that property and casualty insurance, that's home, car, business insurance, they have 2 sections. Liability is section 2 and property is section 1. So just kind of categorize that as we go through these coverages. So anyway, there's your homeowner's coverage. It's got coverage A for the dwelling, other structures. I'm sitting in a studio in my house in Friendswood, Texas, and I'm actually in my garage. And it's a studio that I built in my garage. But this building, this part of the building that I'm sitting in right now, is an other structure because it's not attached to my house. So if this garage was attached with a breezeway, then this piece of property that I'm sitting in right now would be covered under coverage A. A little inside baseball, since this garage is not attached to the building, it's considered an other structure. So it has a limitation for what is covered for this garage that I'm sitting in. So that's that's coverage B, other structures. And then there's coverage C in a homeowner's policy, which is your personal property. So if you look at all my stuff here, this is all personal property. Could be considered business property, which is another important distinction that we should talk about, but we probably won't have time. But I just want you to know all of these different coverages. If you think about what you own, your stuff, if you understand these coverages in a homeowner's policy, it can help you protect your stuff as you get more stuff. So then we get to section 2. Actually, loss of use coverage D, that's an important section, especially in Houston. We're going to talk a little bit about one of the big risks, one of the big, what's the word? Peril. So perils are something that is a huge part of insurance planning because certain perils are covered and certain perils are excluded. So one peril, that's a hurricane, wind, hail, that is a peril, and that's covered under your homeowner's policy unless it's excluded. So I live in Galveston County, and my homeowner's policy excludes windstorm, hurricane, and hail. So if you live in Galveston County, you probably have the same problem I do. If you own your home, you will pay for insurance for your home, but then you'll have to turn around and buy wind insurance. That's a peril. Wind is a peril. Hurricane involves windstorm, hurricane, and hail. And so that's a peril. Now, one more peril that I want to mention is flood. That comes with hurricanes, but it is not covered under your homeowner's insurance policy. So you're going to read a lot this week. In your homework, you have some reading assignments to just read and become familiar with these different coverages. But I want to just mention that in your homeowner's policy, you should know that flood is not a covered peril. In fact, it's excluded. So one of the things that is helpful to remember is that all policies have exclusions. So just remember that. That's part of property insurance. You have covered loss and you have exclusions. And so we're going to talk about your car insurance. We're going to talk a little bit about home, but I just want to kind of do a quick overview to set the table for what you're going to learn this week about insurance. Let's go to, let me see if I can get to the next section. So we're going to cover, I'm going to talk about the auto insurance. Let me just show you what we're going to do here real quick. So we're going to cover auto insurance coverages. I'm going to go over, if we have time, I'll go over a little insurance on home insurance coverages rather. And I want to make sure you understand liability coverages. So that's different than the first party. Remember, there's 2 sections in a property and casualty insurance policy. One is the property coverage. That's what covers you, your property. And the other is liability. So we'll talk a little bit about that. One thing I'm not going to we won't get into today. We really won't have time to get into life insurance and disability insurance, but I do want to mention them because life insurance is a very important part of your insurance planning, your risk management. So if you're young and healthy, you can buy life insurance relatively cheaply. If you wait until you get a little older, it costs more. Life insurance costs more the older you get. So you want to be thinking about life insurance sooner rather than later, especially if you're going to get married and have children and have folks who are depending on you for their standard of living, for their life, and so on. So life insurance is a very important part of your overall risk management, risk planning, and it's not something we're going to spend a lot of time on today. But if you have questions, if you have some specific concerns or issues or questions that you want me to answer, I'll be happy to do that in a separate tutorial. So just send me a message. Life insurance is, again, it's one of those things we could spend an entire semester on. There's all kinds of life insurance, not all kinds, but two main kinds is term life insurance. That is a term, meaning it's only for a certain amount of time, and you pay a premium, and that term insurance goes up. Every time the term renews, the premium goes up and it costs you more. So it's a good life insurance. Term life insurance is a good tool for young people who need protection for a limited amount of time. If you want to protect yourself for your whole life, there's a permanent life insurance policy there, and there's a range of different permanent life insurance policies. So the main distinction I want you to just be aware of to start out is term versus whole life, term versus permanent. And all of these terms can be there's multiple terms for a permanent life insurance policy. Some people call it whole life insurance because it covers you for your whole life. Some people, there are different forms of permanent life insurance. For example, there's a variable life insurance. There's a universal life insurance. There's a variable universal life insurance. So you can do a Google search or ask ChatGTP to teach you about, which is really one of my favorite prompts, to say to ChatGTP, teach me about, and then say term life insurance, or teach me about permanent life insurance. And you'll find a lot of the same information that you'll find in Money Study Group related to those different products that are available for permanent and term life insurance. So I'm getting a little ahead of myself, or maybe not. I want to talk a little bit about how you're going to add, let me go here real quick and get, actually I think I'm going to go to the next section. Yeah, here we go. I'm going to talk a little bit about adding the insurance to Right Capital, and then I'll come back. So let me see if I can lower third. There we go. We will talk a little bit about preparing for a hurricane, and we will also talk a little bit about comprehensive and collision, and we will talk about how to get an auto insurance quote. And right now I just want to talk a little bit about adding insurance to Right Capital, just because I want you to know that you are going to be adding insurance for your car and your home to Right Capital. So you'll just have some, let me see if I can find, well, I'm not seeing it at the moment, but you'll see it here on the screen in a minute. You'll see the screens for where you will add insurance in Right Capital. So if you haven't already done that, some of you are ahead. And by the way, you're doing a great job on your financial planning in Right Capital. Most of you have really demonstrated that it's not difficult for you to basically do your financial planning. You get it. You're not getting stuck with the software. It's pretty user friendly, but sometimes we have students who struggle with it. But this semester, it seems like you guys really are acclimated to it well. So this week you'll add insurance to your Right Capital financial plan, and you'll get a quote too. So when you get your insurance quote, that's one of the things you'll want to do is add the coverages that you get the quote for into your financial plan in Right Capital. So we'll talk a little bit about those coverages here in just a minute. If I can find the page I'm looking for. Here we go. I think this is it. Looks like that one is not set up correctly. So let me just go back here, and I will probably jump into, I'm going to jump into my iPad and pull up Billy's plan here in a minute, and we'll go over that. All right, give me just a second here. Let me see. I had a screen I wanted to show you. Here we go. I think I've got it. Okay. Car insurance. Let's go to car insurance and let me get here real quick. Hold on. I'm looking for. Well, I'm lost. Okay. Okay, give me a second. There we go. Let's talk about car insurance. You're going to get a quote, and here's what I want you to know about getting a quote for car insurance this week. It's your assignment, it's the main assignment. And some of you already have a car and you already have insurance, and so this assignment will be pretty easy for you if you follow my instructions here. Um, what I don't want you to do, what I would avoid doing if I were you, is, and this is true whether you're a student in this course or in real life you want to shop around for insurance, what I would avoid doing is going online and just Googling auto insurance. Because if you do that, if you just go out and get an insurance quote, what's going to happen is you're going to become a target for 100,000 insurance agents who are going to want to sell you car insurance and other types of insurance, which that may be what you want, but I don't know why you would want that. But that's what happens when you go get a quote, as you probably already know. So I wouldn't do that. Here's what I would do. Here's what I would encourage you to do. If you already have insurance, maybe it's your parents, you're under your parents' policy. That's great, that's fine. But whoever you have your insurance with, that's who I would go to get your insurance quote. Go to your current agent and just say, hey, look, you can tell them if you talk to someone versus just sending in a quote online. You can do it either way, depending on your insurance company. But when you get that quote, just let them know that either you're looking at buying this car or you can tell them you're taking this course and it's your homework assignment. Either way. But just get a quote, and I want you to get a quote for the coverages in the car insurance policy so that you can see what you're getting, what coverages you're getting, and then get a quote. So, for example, let's say you're currently insured with State Farm and you're driving a Toyota Camry or whatever. It's got some coverages on it already. So that's great. Start there. And then say, I want to get a quote for this car, the car that you purchased. That's what you want to do. You want to get an insurance quote for the car that you have in your Right Capital plan. So just tell your agent that, or the staff person you're working with in your agent's office. Or if you're doing it online, just go and say, this is the car that I want to add to my policy. And it'll give you a quote. Who do I use? Progressive. I started using Progressive when I retired as a State Farm agent. State Farm is great insurance, but it's not the cheapest. And frankly, I was ready to move on from State Farm when I retired. So I started working with Progressive. They have an awesome app. If I want to add a vehicle or just get a quote for a vehicle, I just go to Progressive and I log into my account and then I just say, I want to get a quote for this vehicle. That's what I want you to do. That will prevent you from getting hammered with all these different quotes. So just do that. Get a quote for the vehicle that you added to your financial plan. And then when you go into Right Capital, and I'm going to try to go over here and I'm going to jump into Right Capital real quick if I can. And I'm going to go to my friend Billy's plan. I'm logging in on my iPad. It's taking just a second, but I want to just show you what you're going to be looking at when you jump into your financial plan. So before I show you my iPad, I want to make sure I get to Billy's plan because I don't want to show you actual clients' plans. So here we go. Now let me get to my iPad. I think this will work. So here goes Billy's plan. Now I'm jumping into Billy's plan, and you should be able to see what I did. I went to Profile. That's what you're going to do. You're going to go to Profile, and this is where we have insurance. So Billy's super cool car insurance. If I open that up, you're going to see just the basic fields that are in this data card. And as always, when you're working on your financial plan and Right Capital, what you're working on is a data card. And so in this case, these are the data cards. So this is what you're going to get a quote for, okay? This is the information you're going to have on your insurance quote. It's going to tell you what these coverages cost. So that's what I want to use to just kind of highlight the coverages that we're going to talk about for the next few minutes. They're all right there. You're going to do the same thing, by the way, for the homeowner's policy. So I'm just going to open that, and it's not as there's not as many pieces of data in the data card. It's got less pieces of data. And by the way, when you get an auto insurance quote, there are a lot of as you can see, there are a lot of coverages in the auto policy. So those are the coverages that you're going to quote or get a quote for. And I would really appreciate if you spend a little time and try to understand what these coverages are. So that's what we're going to do for the next few minutes, is just go over these coverages and see if I can help you understand what they are. So this is the data card that you're going to be looking at when you jump into your financial plan. And I want to start with so whose vehicle is it? In this case, this is Billy's vehicle, and he has 100,000 property injury, and that says PP. See how that says PP right there? If you click on the little info button, you'll see that it's bodily injury per person. So that's the first number. There's 100, 300, and 50,000. That's what we have here. So if we click on this, it's bodily injury per accident. So let me show you, let me tell you, let me explain to you what that actually means. So in this case, Billy has 100, 300, 50. When you get your declarations page or your quote, it's going to have those numbers. It's going to have a number, a slash, another number, a slash, and another number. So in this case, it's 100, 300, 50. I want you to understand what those numbers are. First of all, this is liability, like it says. Well, it doesn't say liability, it says bodily injury, but that is bodily injury. And property damage, even though it says property damage, that's not property damage for your car. This is liability. This is the first big coverage in car insurance, is liability. And so in this particular instance, Billy has 100, 300, and 50. What that means, I'm going to just give you an example of an accident, and I'm going to see if I can get where I want to be. I've got so many screens going right now. I'm going to give you an example of an accident so you understand how these coverages work. So let's say that I'll say that I'm driving. I'll pretend I'm Billy and I'm driving his big old Ford F-350. I think it's an F-350. It's a pretty cool truck. Whatever it is, it was all made up, but it's a nice truck. And he has decent insurance on it. But he's driving this big truck and he's eating a donut. No, he's eating a Whopper, a double Whopper with cheese with extra pickle and onion, of course. and he's driving in traffic in Houston, and he's texting. Billy occasionally, like some of us, picks up his phone while he's driving, while he's eating, and it's crazy because I'm on my Goldwing motorcycle driving around, and everywhere I look, I see people on their phone texting while they're driving, and here I am on a motorcycle, and it's a little scary. So Billy's doing that, and he doesn't even realize he drives into a school zone, and he doesn't realize that there's a school bus right around the corner, and he slams into the school bus. Okay, I'm making this up as I go, but let's just say that when he hits the school bus, his truck flips, and because he hit there's a speed bump there, he was going around a corner a little too fast, hit a speed bump. He was eating the Whopper, drinking the soda, texting, and he wiped out basically. And his truck goes into the school bus, does damage to the school bus. There's 10 kids on board, but his truck crashes into this telephone pole, and the telephone pole falls, and when the telephone pole falls, it falls on this building, and it breaks the solar panels. This is all new. I just made this up. Pretty bad accident though, right? Okay. uh, we could say this is in a heavy traffic. It is pretty heavy traffic. In this case, it's a commercial zone, and Billy's, there's a school bus there. So what happens? 100, 300, 50, that's his coverages. So now what happens? 10 of the kids on the school bus go to the hospital, and some of them have pretty serious injuries. So how much will this policy pay per injury? It will pay up to $100,000 for each student who goes to the hospital. Up to $100,000. What about if 10 students, 10 of the kids go to the hospital, and let's say that each one of them has a $50,000 hospital bill? How much is that? 10 kids go to the hospital with $50,000 each in hospital bills. That's 10 times 50, that's 500,000. How much will this pay per kid? It will pay up to 100,000, but if there's 10 kids, how much will it pay? Will it pay 50,000 for each child? Well, no, that's where this bodily injury per accident comes in. This is the aggregate amount that Billy's policy will pay for any accident that's his fault. So in this case, it's only going to pay 300,000, which means there's a $200,000 shortfall. Okay, so Billy's policy will pay up to $100,000 per student for each kid that goes to the hospital, but there's not enough money to pay for all of them. So the adjuster, the insurance company, will come up with an amount that they think is fair, and they will pay it out less than the full amount of the injuries, less than the full amount of the hospital bills, not even to mention pain and suffering. And maybe if one of the kids was deconfigured in the accident. I mean, these are the kind of things that I was an adjuster for many years. I handled some really gruesome claims, and I'm not trying to be gruesome. I'm not trying to scare you. I just want you to know how your insurance works in a somewhat not realistic example, but an example that will help you understand how the numbers work. So the policy will pay up to 300,000, but we have 500,000 in hospital bills when we put all the kids together with 50,000 each. So basically, Billy is going to be on the hook for $200,000. Now let's talk about property, and then I'll wrap up this scenario, this accident. So now property damage. When Billy runs into the school bus, well, remember, he kind of flips into the school bus, and in that scenario, the school bus, which was an electric school bus, because Kamala Harris loves electric school buses, and we have electric school buses on the road now, and they're much more expensive than a diesel or gasoline school bus. So the school bus was damaged, and the battery pack was very expensive, and the whole battery system, the whole charging system, all of it got destroyed because of the way that Billy's truck rolled into the school bus. And so the school bus had some damage that was going to be about $170,000 to repair. And remember, Billy's truck kind of rolled into a telephone pole, and the telephone pole fell onto a little structure, and it did about $20,000 to the roof of the structure. And the telephone pole itself was about $15,000. So that's $35,000. $15,000 for the telephone pole, $20,000 for the structure that the telephone pole fell on. That's $35,000. And I said that the school bus repairs were $170,000. So if you're writing all this down, that's 170 plus 20 is 190 plus 15, I think I said, would be $205,000 in property damage. How much coverage does Billy have? 50,000. Does he have enough coverage? No. So you can come up with your own scenario. I just want you to understand how the coverages work and what these numbers mean, so that when you get a quote, you can have some sense of how much coverage you have. Now, if you don't have any money and you're just insuring yourself because you have to, because it's a requirement, then you can get the minimum and you might be okay. But I want to explain what happens in a scenario like this. Most people carry like 25,000, 50,000, 25,000. Okay. I have a client I worked with this week in doing a financial review. We looked at their insurance, and that's what they had: 25, 50, 25. Now, that's not terrible. I mean, it's legal. You can carry that. But if you have money, you might want to rethink that, because here's what's going to happen. And if we change this, let's just say that he has 25 and he has 50 and he has 25. Okay, now his premium is going to be a lot less. I just saved that. Sorry about that. His premium is going to be a lot less, but his coverage is going to be a lot less as well. So in the event that we just had the same accident with 10 students who had $50,000, and that's $500,000, what's going to happen with Billy's policy? His policy, most likely, the insurance company is going to pay out the maximum instantly. They're not even going to, they're going to do an investigation. They're going to make sure that it was Billy's fault, but it's going to be super easy because you got the extra pickle and onion, you got the whopper, you got the witness, you got the text, you got the phone, you got evidence that Billy was a distracted driver and he caused this accident. It was his fault. No question about it. So what's the insurance company going to do? They're going to pay out the limit. And then after they pay out the limit, they're going to close their claim and they're going to owe nothing else to anyone because they paid the limit. Now, if the insurance company decides to negotiate and try not to pay the limit, then they're going to continue to defend Billy if this goes to court, which it very likely would. If you get in an accident and it's your fault and people get hurt, you're going to get sued. Your insurance company is going to pay for that. They're going to pay for the defense. And there's no limit to how much they will pay for that defense. That's really good news. The bad news is they stop paying that defense as soon as they pay the limits on the policy. So in this scenario that I just gave you with the school bus and 10 students, Billy's policy, now I changed it, I know, just to make the example more clear, but in this case, Billy's going to be on the hook for $450,000 because the policy is only going to cover $50,000. I know I changed it. It was $300 a minute ago. I just changed it. So that's what their policy is going to pay. They're going to pay the limit and they're going to be done. They're going to get a release for that check, which means they're going to write the check, get a release. If the people don't give them a release, they're still going to send them a check, and they're going to close their claim, and they're going to be done paying for this claim. So in this case, Billy is on the hook for the rest of the money, and that's how it works. So If we did another scenario, another simple scenario, let's just say Billy's driving down the road with his truck. And again, he's texting. He swerves into the other lane and he has a head on collision with a Corvette, a brand new Corvette. Do you know what a brand new Corvette costs? Not to mention any injury to the person driving the Corvette. But the Corvette itself, it's going to be a lot more than 25 grand. So when you get your quote, I want you to think about, I want you to think about what is the cost? What is it you're protecting? Where do you live? Where do you drive? And just be thinking about using good logic and good common sense about how much coverage you think you're going to need. Now, here Billy has $1,000 deductible. He's got collision coverage and comprehensive coverage. Now, FYI, when you do this week's assignment, I'm asking you to give me a screenshot because I want to see that you've done this. I want you to do it, get a quote, but then I want you to put it in your plan, and I want to make sure that you know what these coverages mean, and I want you to have collision and comprehensive. So I want to do a quick review of collision and comprehensive. Let's see if I can find. I tried this, it didn't work so well. Oh, there we go. Liability, that's home. Here we go, let's try this. Okay, so liability insurance, that's not going to work. Okay, I think I will. I don't have, there we go. How to get an insurance quote. I pretty much covered this already, but when you get the quote, just be sure to start with your current insurance company and get a quote. Let me see here. I'm having trouble with my clicker. So that we covered the auto insurance a little bit, the quote. I think I want to show you real quick. Let me get here and show you. Let's see. So we talked about the coverages. You need to add these to your plan. I'd like to spend a few minutes and just kind of give you an overview of comprehensive and collision. Gosh, there's so much to cover here. Let me look at a homeowner's policy real quick and just make sure we cover the information. So you're not getting a homeowner's insurance quote. That's not your assignment this week. But you do have, you do need to add your homeowner's insurance to your policy. So even though you're not getting a quote, you should know how much coverage you need. You're welcome to get a quote as well, but you don't need to. But you do need to get an auto insurance quote. And so let me just mention for students who, let's say you don't have a driver's license and you don't even have a car, you're going to have to be creative, and you're going to maybe have to get a friend, a roommate, someone else who does have a car, and ask them to get a quote for your car on their policy. It doesn't happen very often. But if you're one of those students who has no no reason to have car insurance, I don't know what to tell you, except you're going to have to be creative to get this insurance quote. And there's lots of ways to do that. Ask some friends, and just that's what I would do if I were you. Most of you hopefully are at least somehow going to be needing car insurance at some point, so you should, many of you are already insured, and that's the way to go. If you already have insurance, use your current agent and get a quote, or your current insurance company. And if you don't have insurance, you might want to work with someone who does, and just teach them a little bit about their car insurance coverages as they get a quote. And you can see the difference between the coverage that you have now versus the coverage you might want to upgrade to once you understand the coverages, like we went over these liability coverages. Now let me talk a little bit about collision and comprehensive. And then I'm going to try to spend a little time on homeowners, but I want to cover collision and comprehensive. So these are two coverages that are on your car insurance policy. If you have a loan on your car insurance, you have to carry both collision and comprehensive. So I want to explain what these coverages are. First thing is, remember I mentioned perils? Perils are certain specific things that your insurance policy may cover or may exclude. Certain perils are covered and certain perils are excluded. Like for your homeowner's policy, the peril of fire is covered on every homeowner's policy. Every property insurance policy covers fire. It's like the number one coverage is fire, and it's a peril that is covered. But flood is a peril that's excluded on every property policy you can think of that involves a building. Flood is never covered on a property insurance policy, like a homeowner's policy, a business policy. Flood is a peril that is excluded. So you need to understand what an exclusion is. It's a language in the policy that says this is excluded, okay? So we talked a little bit about deductibles. Hopefully you understand what a deductible is. If you don't, spend a little time. Make sure you understand what a deductible is and how it works on a property insurance policy. Coverages, including perils and exclusions, you need to understand those as well. On an auto insurance policy, if you have a loan, you have to insure your vehicle with collision and comprehensive. You get to choose the deductible, but you have to have the coverage. So I want to talk a little bit about these two coverages because they're very important. Now, first of all, let's talk about comprehensive. Comprehensive is a coverage that provides coverage for your vehicle, but the name comprehensive, what do you think comprehensive means? And this is this week's class collaboration question. What is comprehensive? What does the term comprehensive mean? What is the word? Look it up, Google it, ask Siri, do a chat GTP prompt, teach me about comprehensive insurance. And what you're going to find is that comprehensive, the term, the name, the coverage is very, very, very broad. Just like the word comprehensive means comprehensive, everything. So think about that for a minute. If you have a coverage on your auto policy that's called comprehensive, what do you think it covers? Think about that for a second. This is your class collaboration secret question. So do a little discussion, comment, take a screenshot, share it in Money Study Group or on YouTube or Facebook. But tell me, what do you think the term and the coverage comprehensive means? So that's it. Now I'm going to tell you what it means. So if you're watching, I'll make your class collaboration very easy. So comprehensive means very broad, very, very broad. So if that's true, what would be covered under comprehensive coverage? The answer is very, very simple. Everything. Everything is covered under comprehensive coverage. However, when you have a very broad insuring agreement that basically is all risk of physical loss, that's what it means. And by the way, the same thing is true on a broad form homeowner's policy. So if you have a home and you have an insurance policy, chances are in the state of Texas, if you have the broad form, the best policy available in the state of Texas, you would have all risk of physical loss. That's the insuring agreement for the property coverage on your home that applies to the building, to the dwelling, not to the personal property, not to it doesn't even apply to the extension of coverage like the garage that I'm sitting in right now. But it covers the home for all risk of physical loss. That means anything that happens to it is covered. All risk of physical loss. They call it, or used to call it, APL, all risk physical loss. What does it mean? It's the same as comprehensive on a car insurance policy. Everything's covered. Now, I hope you're still listening, because here's the catch. Everything's covered except what's excluded. Remember, I mentioned exclusions. Very important in an insurance policy. There are always exclusions. Act of God is not an exclusion. People think that all the time, but it's not an exclusion. So when we're talking back to the comprehensive on the car insurance policy, when we talk about comprehensive coverage, we're talking about anything that happens to that vehicle is covered. Any damage to that vehicle is covered, except things that are excluded. So what do you think on a car insurance policy the number one exclusion would be? I'm going to give you a clue. It's right there on the screen. So if you're watching, I'm not going to say it. I'm just going to let you look at that, and I'm going to hope that you consider the possibility that everything's covered under comprehensive insurance unless it's excluded. And this bad boy is definitely excluded for obvious reasons, right? Why would an insurance company offer these two coverages, comprehensive and collision, if you could just buy comprehensive and you didn't need to buy collision? Obviously, collision is an exclusion under comprehensive coverage, but pretty much if you read your policy and you look at the exclusions, you'll see what's excluded. Things like rust, rot, inherent vice, things that happen gradually are never covered by insurance. Insurance covers sudden and accidental loss. It does not cover things that happen gradually. It is never covered under an insurance policy. But under comprehensive, if you can think of it, it's covered. I'm going to give you an example. I was State Farm claims adjuster, but I worked in the homeowners department, okay? I did claims for homeowners. But my friend Vance, who got me the job at State Farm, he was a claims superintendent. So he'd been with the company, State Farm, for many years. He helped me get a job there in the homeowners, fire claims. That's what it's called, fire claims. I was not an auto claims adjuster. Vance was helping us move to this town, Friendswood, from Austin. We had he and I and our sons were in his Suburban. He had a brand new Suburban, and we're doing we stopped because my son Brandon had to go to the bathroom. So we stopped, and when we stopped at a Circle K, I believe, and we got a Big Gulp. You know what a Big Gulp is? It's a big, tall soft drink. Vance got one of those for himself, and he had it sitting in his console. And we're driving down the road, and we're in his Suburban, and he reaches for his Big Gulp, and he pops his shifter into reverse, doing 70 miles an hour down the road. Whoa. You know what happened to his transmission? Brand new Chevy Suburban. It shelled the transmission. It fried the transmission. Now, I used to be a master mechanic. Before I went to work for State Farm, I was a master mechanic. So when Vance took his Suburban to the dealer in a tow truck to see how much it was going to cost to get the transmission fixed, he called me up and he said, "Hey, what do you think? This seems like a lot of money to get the transmission fixed." I said, "Well, yeah, you took it to the dealer. The dealer's the most expensive place to get your transmission fixed. But," I said, "Vance, let me ask you this. Did you turn in a claim for this incident?" And he said, "What are you talking about, Munchback? That's not covered. It's not covered." I'm like, "Dude, wait, think about it. What's covered under comprehensive?" And it is so funny because Vance was helping me understand how the homeowner's policy worked, which has the same provision. It's called all risk of physical loss. So if you're an adjuster, you have to approach every claim, every property claim, with the idea that it is covered unless there's a very clear exclusion. Like, you pay for everything unless it's excluded. So I was looking at the comprehensive coverage the same way, and I was thinking about it the same way, but Vance was like, "No, that's not covered." Who? And so I said, "Dude, call State Farm, turn in a claim." And he did. and they paid every penny except for his deductible. He had a $50 deductible on his comprehensive. Now, do you think Vance ever took me out to dinner for that? No. No, but we were buddies. And he was the guy who sold me that pistol that I told you about a while back that my wife and I got in a big fight about when I was supposed to be on a spending freeze, but I actually bought this pistol and she found out about it and it was a big fight. Remember that story? That was a while back, but same guy, Vance. So that's comprehensive. I'll tell you another quick story about comprehensive. My wife Connie and our two boys, I think she had two boys and a daughter. We did. Carissa was born and she was a baby. I was in Florida. It was right after Hurricane Andrew hit. So I was in Florida working Hurricane Andrew as a fire claims adjuster for State Farm. And she calls me up one Saturday morning. She was on her way to baseball, Little League baseball with the kids. They stopped at the donut shop for donuts, and her van, we had a minivan at the time, caravan, it wouldn't start. So this nice man who was in a welding truck parked next to her offered to give her a jump. And he did give her a jump. He hooked up his truck to her battery and smoke started to come out from the dashboard. It melted the wiring harness because he had a 220 volt welding truck and he connected it to a 12 volt automotive system. Naturally, it melted everything. It fried components. It wasted the stereo. It destroyed the electric systems in that vehicle. And so my wife called me and she was really upset. And I'm gone far away. And she's like, what do I do? What do I do? I said, hey, no problem. Call State Farm, turn in a claim. We have rental coverage, so they will pay for us to rent the vehicle while this one's in the shop. It went in the shop and they basically totaled the vehicle because it was so messed up. And it was covered. Guess what it was covered under? It wasn't covered under collision. It was covered under comprehensive. So it's a very important coverage. Now, I told you that flood was a named peril, right? It's not covered on a homeowner's policy, but guess what it is covered under? Your car insurance comprehensive coverage will cover flood. It will cover if a tree falls on your car or if rats get under the hood and eat the wiring insulation. That's covered. Or if I said if a tree falls on it, if it gets flooded, if it gets caught in a fire, if you have a fuel leak and it catches on fire and burns the vehicle down, it's covered under comprehensive. It's the most, in my opinion, it's the best coverage you can possibly have. So that's car insurance. I want to talk just for a couple of minutes because we're out of time, but I want to talk about homeowners insurance too. Remember, homeowners insurance, let's see if I can get out of this. You're not going to see this on your right capital plan. It doesn't show really anything about the coverages. Let's see though. I think we have insurance. If we go here, no, yep, it's not going to show. So I'm not really going to be able to tell you much about the homeowners insurance, except I wanted you to know that in your homeowner's policy, there's this coverage called medical payments, and it's an important coverage. You probably won't need it, but if you ever get hurt or if anybody you know ever gets hurt on somebody's property, there's this coverage called medical payments to others. It's part of Section 2, liability, and it's an important coverage to know about because what happens is if you have medical bills as a result of an injury, the insurance company will pay that claim pretty much with no questions asked. As long as you have medical bills, you were injured on somebody's property or as a result of their activities, then their policy will cover you for your medical bills. Medical payments to others. It's a very important coverage. Now, I'd like to spend some time and talk about a personal liability umbrella policy that goes over and above your car insurance and your home insurance. It's $1 million coverage. Usually you can get it for $300 or $400 a year. It's a super good deal. It does require that you increase your coverages, but we're just not going to have time to go into it because we're out of time for today. So here's what I want you to do. Don't forget this week's class collaboration is to talk to me about comprehensive coverage. Let me know you understand how it works, what it is, what the term comprehensive means. That's this week's secret class collaboration. So don't miss that. You will get deductions if you miss it, because this is how I know you watched this meeting, the Zoom meeting, which is being streamed live. So anyway, that's it for today. It is 11 a.m. Thank you for being here. You're doing a great job. If you have questions about insurance, any kind of insurance, and you really need to know, you can send me a message and I'll be happy to do a tutorial video to give you some good, clear answers. And I'll post those tutorials in Money Study Group so that if other students have questions, we can answer them. It's a ton of information, insurance, way too much to cover in one lecture. But I hope that this week you'll spend a little time and just become familiar with the basics of insurance. The content is available in Money Study Group to read, but use your other tools, do some chat GTP for any specific things you want to understand better. And if you have something you want me to help you understand better, feel free to send me a request and I'll be happy to do a tutorial. And I hope you have a great week. I'll see you soon.